Hello and welcome. I'm Valerio Baselli and today I'm joined by Martin Dropkin, Head of Credit Research for Fidelity International. Hello Martin, thanks for being here.
Thank you for having me.
So according to Morningstar data, global emerging market bond funds have collected more than 8 billion euros in the third quarter, one of the best results among all asset classes. What is your opinion on emerging market bonds and where do you see the most interesting opportunities right now?
Well, you're right. The flows have been really good over the last few months. It's been driven by a few things, we think. First of all, historically it has been an underinvested asset class. But aside from that, the fundamentals are starting to look a little bit more positive. So if we look particularly at Brazil and Russia, and that's tended to drive a lot of what's happened in the emerging markets, the PMIs have turned positive.
Right.
So in this search for yield environment, in an underinvested asset class where things are starting to look a little bit better, we have seen some flows come in. So that drives the backdrop. And where are we starting to see some value? We tend to focus more on Latin America, where we still do see value, where fundamentals are improving. If I think more specifically, we think Brazil is an attractive opportunity. Argentina, which is not for the faint of heart necessarily, is a very interesting opportunity right now. The new government has clearly set some aggressive inflation targets, and we think that's going to drive a good backdrop. If I compare that to Asia, where fundamentals are okay and nothing is going too badly there, but we just don't see the value there. So on balance, we're looking at Latin America as a good opportunity.
Okay, and we know that in the current environment, the research for income leads investors towards bonds a little bit riskier, with higher yields but with higher risk as well. So how can you combine risk and return in emerging markets?
Yeah, it's a good question. I think there's two broad answers to that. One is credit selection. It's all about using our sovereign research, using our corporate research to find the best ideas out there for our clients' funds. The second idea is this idea of total return, and so moving a little bit of an off-benchmark world and looking at an aggregate return level. So I think that's the direction that the markets are moving, and so that's able to that's the kind of fund that will able to balance out exactly what you're describing.
Okay. Finally, do you expect a rate hike by the Federal Reserve by the end of the year? And in this case, what are the main consequences on emerging markets besides US?
Yeah, well, so we do think that there will be a rate hike by the end of this year. We'll see what happens in 2017. It's looking like a couple of rate hikes next year as well. I think broadly speaking, emerging markets have priced that in, and so if that happens, then we'll be okay. But I think you've hit the nail on the head, which is that is one of the biggest risks to the emerging market asset classes. If rates do rise faster than expectation, then it could be a risk to the asset class. But that's not our base case.
Okay, thanks a lot, Martin.
Thank you.
Thank you.